Industries that are hot, sectors set to outperform the market. That's what's here in Zacks Industry Rank Analysis. Oh, what industry will they be talking about this week? Well, we're not going to keep you in suspense any longer. Charles Roplet, our senior market analyst at Zacks.com, is going to come in here and tell you that on his radar this week are the semiconductors. Things are improving in that industry. I'm reading on Zacks.com even that the book-to-bill ratio has been improving for semiconductors. I don't know what that means, but it's been improving.
The book-to-bill ratio is basically how many revenues do they have actually booked versus how many are they actually billing or sending out. And so it's an important indicator. It's an indicator you want above one. It's nowhere near there. Semi, which is one of the big industry associations, said the book-to-bill ratio is 0.65. So lower than we'd like. However, it's the third consecutive month we've seen an improvement in that ratio. And that's a really good sign that things are getting better, but it's not just that. Really within the past week we had that. Monday night, Texas Instruments, obviously everybody knows, huge semiconductor company, came out, raised its revenue guidance and its earnings guidance, so another bullish sign there. And finally, we're seeing earnings estimates continue to be revised higher. We discussed this back in March, how we had seen a shift in estimates going from more negative revisions than positive revisions to seeing slightly more positive revisions than negative revisions. Now we're seeing many more positive revisions than negative revisions. So really, over the course of the last 5 months, we've seen a shift from the industry showing signs of really staying in a contracted state to really now where we're actually in the initial stages of a recovery. So it's a very good shift for the industry. Obviously not out of the woods, but things are definitely improving.
All right, so despite my feeble attempts at humor there in the beginning, obviously a key indicator for this industry. But what does this mean then, translate it down to the average consumer? What does it mean for computer sales, for digital phone sales, and all the rest of those products that use chips?
Well, I think what's happening is because the economy is starting to move towards stabilization, the economy is still contracting. I want to make that clear. But as we move towards stabilization, we're seeing demand for PCs and cell phones and other electronic devices improve, and that in turn is helping to drive the semiconductor prices high. I shouldn't say drive semiconductor prices higher, but helping the semiconductor industry as a whole. I think for consumers, what you're going to start seeing is probably stabilization in price. Certainly, the cost of devices have dropped. Apple just came out this week and announced a 32 gigabyte iPhone, I believe, for about $199 or $299. We're seeing prices across the board drop. My wife needed a new MP3 player for the gym. I bought our 2 gigabyte Sansa on sale at Office Depot for $19.99. So
you're just a walking commercial.
I'm a walking commercial, but so I think for consumers, we're not really going to see necessarily prices suddenly rise. But we may not see the steep cutting that we've gotten used to. We might see more stabilization. But for the industry itself, though, as it moves to more advanced and more efficient manufacturing methods, it will mean that we'll see the amount of memory we get in our devices increase. And certainly right before we were filming this, we were discussing how there's a case to be made that eventually cell phones could actually replace cameras, and our cameraman said it, so it's got to be true.
Right.
But
not television cameras. I just want to clear that up.
Right, but I think for consumers, you'll increasingly see that trend of more memory. But right. I think to keep expecting memory itself to continue dropping in prices, I don't see that happening. Rather, the chip companies themselves have gotten a lot better at trying to manage inventory. That's causing either gross margins to stabilize or some companies actually improve ever so slightly. And so that's a very big positive for the industry, because what was happening is we had a glut of inventory and then demand suddenly weakened. And you don't need to be an economist or a market strategist to know that's not good for any industry. But everything looks like it's now headed in the right direction, which is a very big positive.
And is there anything over the near term you feel that could derail this upward trend in this industry?
Well, I think it would just depend on the economy and having a shock to the economy itself. There was a Fed official talking this morning as we taped this June 10th saying that the economy looks like it's heading in the right direction. And so I think as long as the economy continues to improve relative to where it was before, I think that's going to be beneficial. Obviously, if we have some type of unexpected shock to the economy, I think we could see the pace of recession again getting worse and not better. So that could be a problem. But I think I should point out to people, although the rising earnings estimates does signal that chip stocks should outperform over the next 1 to 3 months, some of the optimism about the recovery has been priced in. And overall, neither the chip industry or the economy is out of the woods quite yet. But relative to where we were in March, and certainly relative to where we were in January, big positive shift, and that's a very good sign for the chip stocks.
All right, so you would encourage investors maybe to start taking a look at some of those stocks?
I would definitely start taking a look, and if you've been sitting on the sidelines, I think the technology sector as a whole is a good area to look at. An ETF trader, we do have a broad tech fund in there right now. So it's something for people to look at because they will benefit from any economic recovery overall. But certainly chip stocks tend to be a little bit more volatile, a little bit more economically sensitive, and certainly if you have a long enough time horizon and you're willing, it might be something you want to look at from that standpoint, but certainly if you're an active trader, keep an eye on the chart and consider these stocks as something you might want to play over the next 1 to 3 months.
All right, you mentioned a couple of stocks. Do you own them?
Not the ones I mentioned.
All right. Well, obviously the chips are not down for semiconductors. Another feeble attempt at humor there, or pun. But if you want to read more about it, go to Zacks.com's homepage, scroll down until you get to the headline under the banner of Industry Rank Analysis, and that link there will take you right to it. With Charles Rotblatt, I'm Terry Ruffalo.